I am Dr. Divya Verma, Associate Professor in University School of Management Studies, Guru Gobind Singh Indraprasth University, Delhi. In the series of lectures related to Fintech, today we are going to discuss about Fintech and its introduction. In the previous lecture, we talked about money supply and the role of circular economy in the money supply. So the money supply and the payment system play a crucial role in economic development of any country. They come from an efficient financial system. Central banks play a crucial role in regulating money supply through monetary policy, such as adjusting interest rate to maintain price stability and promote economic growth. The availability of money supply is essential for smooth functioning of any economy. A sufficient supply of money ensures that businesses have access to capital for investment and expansion, and consumers have access to credit for purchases. Payment systems facilitate the exchange of goods and services in an economy, making it easier for businesses and consumers to engage in transactions. Payment systems including cash, check, credit card, digital payment platform, etc. also exist. So an efficient payment system can lead to faster and more secure transactions, reducing transaction cost, increasing economic efficiency. So together, a well-regulated money supply and an efficient payment system can contribute significantly to the economic development of any country. They can increase access to credit and investment, capital, promote entrepreneurship and innovation, and facilitate the exchange of goods and services. An efficient payment system can also reduce corruption and informal economic activity, which can increase tax revenue for government and contribute to overall economic growth. Digital payment systems in particular have potential to promote financial inclusion by making it easier for individuals and small businesses to access financial services. So if a country has a good financial payment mechanism, so the payment systems are efficient, money supply flows in an organized way, so it is an enabler of any technological intervention or any innovative financial products that can exist. Also, we understand that in any economic system, in any economy, financial system plays the central role. And there are four important components of the financial system. It includes financial institutions, which also include regulators, financial markets, financial assets, and financial services. When they all operate with coordinated efforts, the economic development happens faster and there is financial stability in the economy. So the introduction of technology has had a profound impact on the financial system also, transforming the way financial services are delivered and consumed. These changes have led to increased efficiency, convenience, accessibility, and have also created new opportunities of innovation and growth in the financial sector. Some examples on how technology has impacted different components of financial system includes, like with respect to financial institution, for example, banking institution is the biggest contributor in the overall financial system. So technology has transformed the way banks operate. With the introduction of online and mobile banking, it has made it easier for customers to access banking services from anywhere at any point of time. The use of technology has led to the development of new banking products and services, such as mobile wallet, digital lending, robo-advisory platforms. Another important component of financial system is payments. Technology has revolutionized payment systems with the introduction of digital payment platform, making it easier and more convenient for consumers to make payments. These platforms have made it possible for businesses to accept payments from customers across the world without the need for physical payment instruments like checks. If we talk about the investment world, technology has made it easier for investors to access wide range of investment products, including exchange-traded funds, online trading platforms. The use of technology has led to the development of robo-advisory platforms, which use algorithms to provide investment advice and portfolio management services. In the insurance sector, technology has transformed the insurance industry with the introduction of digital insurance products and services like online insurance portals, mobile apps, usage-based insurance. These technologies have made it easier for customers to buy and manage insurance policies and for insurers to collect, analyze data and to price insurance products more accurately. So basically we have regulators in all domains. Regulators in all domains of financial system have brought in policy changes to match up with changing requirement of technology driven financial processes, products and services. And all of these components form the players in fintech. Now, if we talk about main players in the fintech market or fintech industry, there are many players in fintech industry, ranging from startups to established financial institutions. So if we talk about fintech startups, there are new companies that are focused on leveraging technology to provide innovative financial products and services. And for example, digital payment companies are there like Paytm, PhonePe, online lenders like Lending Card, Capital Float, robo-advisory platforms like Scriptbox and Zerodha. There are traditional financial institutions which are also an important component in the fintech player market. Established banks and other financial institutions are also getting into fintech space, either by developing their own technology solution or they are partnering with fintech startups. For example, there are fintech financial institutions which are involved in fintech includes ICICI Bank, HDFC Bank, SBI, etc. Then there are big tech companies. There are tech giants like Google, Amazon, Apple. They are also involved in fintech, either by developing their own financial products and services or by partnering with financial institutions to provide fintech solutions. Regulators also play a key important role in fintech market, as they need to ensure that new fintech products and services are safe and compliant with the relevant regulations. In India, RBI, Securities and Exchange Board of India, SEBI, NPCI are main regulators in the fintech space. Overall, the fintech industry is characterized by a diverse range of players with startups, traditional financial institutions, tech companies and regulators, and all are playing a key role in driving innovation and growth in this sector. So, if we provide all the available platform, for example, an organized financial system which is robust, which has all the components existing, then we have the payment mechanism in place, and then the technological intervention have come. So all of these three things together, they have led to financial innovation in this sector, which has led to the growth of fintech in the financial world. Another contributor in this is India Stack, India Digital Stack. So India Digital Stack is a set of digital infrastructure and services that have been developed by Government of India to promote adoption of digital technologies and financial inclusion in the country. India Stack includes set of APIs, application programming interfaces, that enables various stakeholders to build and integrate digital services and solutions. So there are four key components of India Stack. One of them is Aadhaar. Aadhaar is a unique identification number that is assigned to every resident of India. Aadhaar is used for identity verification and is a key component of India Stack. The Aadhaar API enables various stakeholders to verify the identity of their customers in a quick and secure manner. Second component is eKYC, which is very popularly when you go to a bank, you get to know you have to get a KYC done. So eKYC is a paperless electronic process of verifying the identity of a customer. eKYC is based on Aadhaar infrastructure and enable businesses to verify the identity of their customers very quickly in a secure manner. Then we have UPI, Unified Payments Interface. UPI is a payment interface that enables instant money transfer between bank accounts using mobile phone. So UPI is built on top of the India Stack and has become a popular payment system in India. Then we have DigiLocker. So it's a digital locker provided by Government of India that has enabled citizens to store and access their digital documents in a secure and convenient manner. So DigiLocker is built on the top of Aadhaar, enables citizens to access their government issued documents like driving license, voter cards in digital format. So overall, India's stack has played a crucial role in promoting the adoption of digital technology in India, particularly in the areas of financial inclusion and digital identity verification. It has enabled various stakeholders to build and integrate digital services and solutions, and thereby driving innovation and growth in the fintech industry. So if we talk about what are the growth drivers of innovation in India that has led to the development of fintech. So there are high volume of funding from venture capital, private equity, institutional investors which are driving innovation in this particular financial sector. So India Stack, we have already discussed about it. It's the most important growth driver when we say that why India is doing so good in fintech market. So we have open API platforms like Aadhaar, UPI, bill payments, GSTN, and all of these are a part of India Stack. Then there were technological innovations that have led to that have been the driver force in the successful availability of fintech in India. Implementation of new business models driven by technologies like AI and machine learning. If we look at this particular graph, where we look at how much is the growth of enrollment in Aadhaar digital ID. So from year 2000 to 2019, if you see how much is the growth in the Aadhaar enrollment of public, which was a big challenging task for India to get such a huge population base to get enrolled for Aadhaar, and we have been successfully able to do it in a big way. So there is increased internet and smartphone penetration, which is also a growth driver of innovation. So India has second largest number of smartphone users globally, and India is the second largest internet users market also. 1 billion internet users by 2026. The number of households with internet connection has increased by 46%, reaching to 233 million households by 2026 as compared to 160 million in 2021. And if you look at how many people in India are now using digital wallets for making retail payments, and you can see in this particular graph that there is such a huge rise in this the use of UPI and use of other digital wallets for making small retail payments. And the period of COVID 2019-20 onwards to 2021, that has seen a huge upsurge in this volume of online payments made by people. So there are favorable demographics which play a most important role as a growth driver of innovation. 68% of India's population is young, and 55% of its population is in the age group of 20 to 59. That is the working population in year 2020, and it is estimated to reach 56% of the total population by 2025. By 2030, India will add 140 million middle income group and 21 million high income households, which will drive the demand and growth of India fintech space. A lot of financial inclusion initiatives have been promoting innovation and fintech market. Financial inclusion programs such as Pradhan Mantri Jan Dhan Yojana, DAY NLRM, Direct Benefit Transfer, Atal Pension Yojana have accelerated the digital revolution and brought more citizens, especially from rural areas, within the ambit of digital financial inclusion. So all of these factors have been enablers of innovation in the financial sector, have enhanced the performance of the financial system to enable it to reach to everybody in India, even if they were unbanked, they were the ones who were not getting were not having the technology available. So fintech has multiple benefits also for a huge population base like a country like India. Now let's talk about fintech. What is fintech? We have heard this word fintech. It is financial technology. As per Financial Stability Board, they have defined fintech as it is technologically enabled financial innovation that could result in new business models, applications, processes, products, or services with an associated material effect on financial markets and institutions and provision of financial services. Apart from this, fintech also includes online marketplace lending known as peer-to-peer lending, equity crowdfunding, robo-advice, financial applications of distributed ledger technology, and financial applications of machine learning, also referred to as artificial intelligence and machine learning nowadays. So, it is a combination of financial services and technology, and it has certainly earned that stereotype, including those applications which are mobile first, customer centric, disruptive to risk averse industries, all hallmarks of fintech. But the industry's reach is much broader, extending to the back offices, financial ledgers of banks, insurers, property management, firms, government regulators, and more. Rods-Croft have also defined fintech. Fintech is any company using technology to support financial services of any type, which can include regulatory technology, lending, payments, savings, investing, insurance, robo-advice, accounting, risk management, claims processing, and underwriting. Gensler said that there are three developments from mid-90s that gave birth to the modern fintech: the internet, mobile phones, and the cloud. It's not a coincidence that Amazon and eBay were both founded in 1995 and PayPal followed the year later. And 1996 globally was an important year where we could figure out how secure commercial transactions on internet and how to move packets of data around the cryptographic way. So all of a sudden after 1996, a lot of things started, and we could see that change. So fintech as definition is a blend of financial and technology. It refers to any app, software or technology that allows people or businesses to digital access, manage, gain insights into their finances and or make financial transactions. Over the last decade, we have seen that consumers have adopted digital tools. Fintech arose the means to help consumers address financial challenges and make progress towards their financial goals. In turn, consumers have come to rely on fintech for their range of usages, from banking, budgeting to investment, lending, as well as, everyday tangible benefits. So fintech company is the one that employs emerging technology to provide financial services basically. The technology used depends upon what is being offered, whether it is applied to back-end systems or customer-facing experiences. So fintech encompasses everything from internet to the cloud services, mobile apps, blockchain, artificial intelligence, cryptocurrency, digital payment applications, etc. The areas of actual and potential expansion of fintech include transaction execution, that is payment and clearing settlement, fund management, which includes deposit, lending, capital raising and investment management, and insurance. The ability to impact on essentially all these services typically offered by traditional financial institutions like banks comes from cost reduction, which fintech is providing as an advantage implied by digital technology advancements, improved and novel products for consumers, and limited regulatory burden on everyone. More specifically, if we talk about with technological advancements, fintech operators benefit from lower cost of search that enables matching in financial markets more effectively. The economies of scale in collecting and manipulating large bunches of data, cheaper and more secure transactions, transmission of information, lower cost of verification, all of these are reasons why fintech has existed. Now, if we talk about recent developments in fintech, so India is considered to be the fastest growing fintech market in the world. We are third largest fintech ecosystem globally. The Indian fintech industry ecosystem sees a wide range of subsegments, including payments, lending, wealth technology, personal finance management, insurance technology called as InsurTech, regulatory technology called as RegTech. So highest fintech adoption rate globally we have. It's 87% is the adoption rate. Currently there are 2000 plus DPIIT recognized financial technology, that is fintech startups in India, and the number is growing very fast. India's fintech industry market size is $50 billion in 2021, and it is estimated at $150 billion by 2025. Fintech sector in India has expected to be $1 trillion in assets under management and $200 billion in revenue by 2023. If we talk about payments, lending, and insurtech, they stood as the most preferred sector in 2021. Indian fintech market has received $29 billion in funding across 2,084 deals till date, from January 2017 to July 2022, gaining 14% share of global funding and ranked number 2 on the deal volume. The fintech sector in India has seen a funding of $8.53 billion in 278 deals in year 2022. So you can see how massive is and fast developments are happening. As in July 2022, India has 23 fintech companies which have become unicorn with a valuation of $1 billion. As of September 2022, India's Unified Payment Interface UPI has seen participation of 358 banks and has recorded 6.8 billion transactions worth $135 billion. India records over 23 billion digital payments worth rupees 38.3 lakh crores in third quarter of 2022. UPI transactions in India have witnessed a growth of 650% in semi-urban and rural sectors in India, a growth of nearly 25% and 14% in value and volume respectively in assisted financial transactions across semi-urban and rural retail counters in the country in 2022. If we look at the digital investment market, which is set to be $14.3 billion by 2025, growing from $6.4 billion in 2021 at a 5-year CAGR of 22.4%. So period of tax benefit to funds relocating to IFSC GIFT City extended till 31st March 2025. India's digital payment market is at an inflection point and is expected to be more than triple from $3 trillion today to $10 trillion by 2026. So as a result of this unprecedented growth, digital payments, which are non-cash, will constitute nearly 65% of all payments by 2026. That means out of 3, every 2 transactions by value will be digital in India. Don't you wonder that why there is so much hype around fintech? Suddenly, in last few years only, we have just started listening about fintech everywhere. So fintech innovations are not the first innovations or are not the set of innovations that have involved technology. Technology was existing earlier also. We had so many clusters of innovation at different points of time which were coming up, but never it was a hype that was being created just like fintech. So what is different this time? So maybe what is different this time is that the innovations that are happening, that are forming some clusters which are utilizing the technology. The volume of technology enabled innovation is what has drawn the attention of people around this world called fintech. So why fintech is occurring now, or why fintech is being talked about now? We need to look beyond just technology as a driver of supply, that why fintech or why these clusters of innovative products, processes and institutions are coming up just now, and we are talking everywhere about fintech. So we understand that financial institutions regularly offer new products and services. For the most part, the new products offered arise from surface innovation. In previous lecture, we have talked about surface innovation, genuine innovation and foundational innovation. The underlying product is the same, but some of the features of the product are changed a little bit, and that is known as surface innovation. Even some of the earlier fintech innovations could be viewed as surface innovation only. For example, online banking was not a new product, but it was just a new feature added to existing bank accounts. So more recent fintech innovations, on the other hand, have consisted of many more offerings that were truly genuine. For example, products like peer-to-peer lending allow investors to invest directly in the businesses or personal loan of other people. So it's a genuine innovation. I mean, it's the depth of this innovation is too deep, and it's a newer kind of product or service which is being offered. Then privately issued digital currencies like Bitcoin is another example. Now, these currencies are not just a slight change to the existing method of payment. Instead, they offer people the ability to make transactions without a government-backed currency and without a trusted third party. This seems that at very least it to be a genuine innovation. So we need to understand that, why these innovations happened. So if we look at fintech from that broad perspective, that innovations were happening, technology was existing from decades, and technology was intervening and entering into different sectors. India had got a robust financial system, and we had got a good payment system which was existing, a comprehensive and efficient payment mechanism which was existing, which enabled everything. And then Aadhaar and the India Digital Stack initiatives taken by the government, they became the enablers. India's demographics became another enabler, which had led to companies and institutions to bring about that innovation. So all of these things become supportive, and then those innovations that happened in a big chunk in the form of clusters in a big way. So they have led to created this world called fintech and this hype about fintech. So we'll talk more about it in the next session. Thank you.